Dharmesh Mehta, the MD and CEO of DAM Capital Advisors, who's joining us live on the market. Good morning. How to make sense of all of this, navigate through it, befriend volatility. But first up, what is it that you are advising your clients? Stay invested, take cash off the table, what?
Good morning. I wish it was a better morning today rather than seeing all red all across. But I think so this is the correction which people were waiting for because the markets had heated up a lot in the last few months and valuations had gone crazy. I think so this kind of correction is healthy for the market, especially for India, where we believe the economy is still doing very well, unlike the other countries. And this can be an opportunity for people to buy into. But as the markets are going to be volatile, people will have to time this market better and maybe average out their buying.
So you're suggesting average out the buying. But just the velocity with which the FIIs are selling, the kind of correction that we are also seeing at the moment, and we don't know, right, how much more of the pain is going to be there, given all of the news flow that's coming in globally. How should one be? What kind of a strategy should they be doing for this accumulation one that you're talking about?
I think so. There's too much importance given to FIIs. In the last 2 years, as you've seen, they have been sellers, while the local guys have been the buyers, the retail investors, through the mutual funds or SIPs, and they've done very well. So I wouldn't be too worried what FIs are doing. More important is this current rally, which we have seen in the last few years, is more a domestic-driven rally, and the confidence of domestic investors need to stay. And I believe there are very little avenues of, options for people to invest in other products. So I think the equities will be still the preferred product, and hopefully with this correction, people will be able to buy into companies which are good long-term investment companies at a reasonable valuation. So I would definitely be adding into this fall slowly and steadily, as I said, because there's going to be volatility. We don't know which way this is going to go. Nobody knows. So in fact, that's the reason I said one has to average out buying. But clearly, this is one buying opportunity which people are waiting for.
Sure enough. Dharmesh, just taking a cue from that, you've been the banker to many successful IPOs in the year gone by. I wanted to understand what is it that you've made of the current fall that we've seen in the newly listed universe. I mean, can an ICA now be bought 50% lower from its listing price or a Paytm close to its IPO price?
Well, I would say the new economy companies are not for retail investors. They need to understand this business model. A lot of them will fail, but a lot of them will be path breakers, and they will do better. Valuation is anybody's guess. Nobody knows how to value those companies right now, especially in India. People are following the global trend, and the global trend has been bearish on these companies, and they have fallen significantly. Hence, even in India, those stocks have fallen. But at certain price point, they would be a good buy, especially the disruptors, where the things have changed forever. So I would be looking at good valuations to buy into these companies. But it's not for the normal investor. I think the smart and educated investors need to play this, not the retail investors.
Fair point. Where else, Dharmesh, would you believe that the normal has changed? And where is it in this current fall and the recovery, hopefully soon after? Would you say avoid this space, especially for the retail participants out there?
I would say tech companies are the one which they should definitely avoid because these are all loss-making businesses. It takes longer time for them to become profitable, and somebody has to need the patience for this. And the valuations are not cheap by any standard. So clearly they should avoid that because it's not their cup of tea. But on the other side, there are a lot of sectors which will start doing well this year, especially the financial sector. I believe a lot of people should start focusing on good businesses which will start turning around corner this year with the economy doing well. Unless and until oil goes for a toss to $125, then obviously all bets are off. But if the oil remains anywhere around 90 or lower than $90, I believe the financial sector should do well this year. And you have engineering sector which is supposed to do very well this year. And all bets are on engineering sector this time, especially manufacturing in India, which is the theme for the current year. I would actually start looking for companies in this fall who are in these sectors.
Dharmesh, is this also time to maybe stay away from the commodity-related stocks?
Well, I'm not sure what is the impact of this whole situation. In fact, you may have the people start holding commodities. So I'm not too sure whether that's the right strategy currently. And as I've been speaking to a few of the dealers in commodity, the prices are still high and there is volume. So the numbers of the commodity companies should come out very well even this quarter. So I'm not too sure whether I should stay away from commodities completely.
And can I ask you what you have used this recent correction that we've seen? And if you look at the Nifty and the Sensex is now for year to date trading along the flat line, given up all of the gains. What did you use this as an opportunity to buy?
No, I would rather not go macro. I'll go micro. So it's stock selection which will matter this year, because the macro rally of India has already happened in the last 1 year, 2 years. So this is not a macro game now. This is going to be a bottoms-up game. So stocks which have corrected a lot and still have a good business model, good profits, those are the ones I will be targeting to buy. I would not like to name the individual stocks, but as I said, one sector definitely should do better this year is the financial sector. So if any correction happens in banks, that's what I'll be looking to add.
To speak with you. Thank you so much for taking time and reacting to the way the market fall has been. We're not clearly seeing any sign of a rebound. Having said that, just a smidge of a recovery, really meaningless. We're still sub the 17,000 price point, I beg your pardon, 250 points lower still. Only